Hi, good morning, everyone. Welcome to our Phillip Securities Research morning call. Today, we have an update on city developments, some results for Singtel, LHN, as well as Netlink, the usual technical analysis, then followed by the Singapore Weekly. So without further ado, I'll hand over time to Darren to get us started on CDL. Thanks.
Yeah, thanks, Zin. Yeah, so for CDL, they released their operational update, so no financials were provided. Yeah, next slide, please. Yeah, so for this update, the positives were that there was strong sales under the property development segment. So first quarter, we saw that they sold 429 units. So this was mainly driven by the launch of Lumina Grand. So 74% of Lumina Grand has been sold to date. The Tembusu Grand and the Mist continues to sell well. So now the Tembusu Grand is about 62% sold and the Mist is about 59% sold. So upcoming there'll be two launches in second half. So one is Union Square and the other one is a project that's at Champions Way. So these two combined is about 700 units. And to replenish its land bank, they've secured a 165,000 square foot government land sale site. So this is with the JV partner Mitsui Fudosan, and this was just in April, and they did it at about 1,202 per square foot per plot ratio, or 1.1 billion in totality. So this this site is located along Zion Road. So it's connected to Havelock MRT station, so it's very accessible. And they plan to develop it into a integrated mixed-use project comprising of two blocks. So with about 740 units and a retail podium. So that is for the property development segment. And for hospitality segment, it continues to improve. So first quarter RevPAR, it rose 5.3% year on year. And right now they have plans to refurbish 4 hotels. So this is Millennium Hotel London Knightsbridge, M Social Phuket, Millennium Downtown New York, and the M Social Hotel Sunnyvale in California. So all this in total is about 278 million of capex or refurbishments. And recently, they also acquired a 268 room Hotel Paris Hilton Paris Opera Hotel. So this acquisition was done at 240 million euros and was done just before the Olympics. So they'll stand to benefit from the demand from the upcoming Paris Olympics. And another positive is that they recently just bought back some shares. They bought back some ordinary shares and they plan to buy back some more of the perps. So for the ordinary shares, they bought back about 13 million shares and it accounts for about 1.43% of the total issued shares outstanding in the market. And they bought this back for a total consideration of about 76.4 million. So the price was about 5.80 on average, 580. And the ordinary shares, they will be held as treasury shares, so it won't be cancelled immediately. And for the preference shares, they are offering to buy back another 10%. So in December, they bought back 10%. So now they are offering to buy back another 10%, and the offer price is also at 78 cents. So 10% of it will be about 29 million. And the thing is, we think that a lot of these preference shareholders, they will likely subscribe to this offer because if they want to monetize their holdings, it's very hard to do it in the market because there's no liquidity. Like every day, the preference shares, it only trades a few thousand. So if you want to liquidate your shares, you take, if you want to liquidate, like, let's say 10%, let's say 29 million, you take a few years. So yeah, we think this is a good time to monetize these preference shareholdings. And for the negatives, basically they have higher gearing. Their gearing on fair value investment properties, it rose from 61% to 63%, and the ICR now is at 1.2 times only because of higher loans and higher interest rates. So, but CDL now, they still have a strong liquidity position. They have about 2.4 billion in cash, and about 3.7 in credit facilities as well, if you include undrawn credit facilities. So for the outlook, they have about 1 billion in divestments. That's the target in 2024 to recycle capital, as well as possibly to pay off some debt as well. And if they are successful to divest any of these assets, they highly likely will get some significant divestment gains because CDL, they carry assets at cost in their books. So some of which they've held it for many decades already. So if they do manage to sell, it's highly likely to get a very big divestment gain. And the property cooling measures continue to hurt demand. So in 2023, if you remember, they wanted to launch new port residences, but because of this cooling measure, they delayed it. And until now, yeah, they've not launched new port residences. So yeah, basically foreign buyers after this ABSD hike has disappeared. Yep, and the hospitality segment, it continues to improve. There's still a strong lineup of events in Singapore, like mega concerts and MICE events, and the strong and there'll be a lot of strong demand from for the Paris 2024 Olympics as well. So yeah, like I mentioned, they previously acquired the Paris hotel, so they'll benefit from that. And with that, no change in our target price, no change in our call as well. We still maintain our 45% discount to RNAV of about 12.50. Yep, so that's all from me. I hand over time to Zane to do some technicals. Thanks.
Thanks, Darren. I'll move on to the TA. So first up, looking at S&P 500, last week was quite sideways. However, we saw a retest of the previous all-time high resistance at 5,265 before a rebound on Friday. So with that, we're likely to see maybe some further sideways consolidation, but with a bullish upside bias to continue its recent bullish momentum. With immediate resistance at 5,325 to 5,350 area, while support could be at 5,245 to 5,285 area. Then as for individual counters, the first one is a technical buy for Coinbase at $225.19 with a take profit levels at $260 and $280, with a stop loss at $210. The stop loss closed at $237.65 on Friday. So looking at Coinbase chart, recently it broke out this descending wedge consolidation, descending wedge pullback, and then this came after the price form a double bottom at $198 level. To support that, we also seen fresh bullish crossover in the MACD as well as bullish divergence in the RSI when price was pulling back. So this gives us a bullish view for price to do a rebound towards these two take profit levels, which were prior resistances. The next one is a technical buy on Eli Lilly and Company at $802.91, take profit level at $860, stop loss at $775, and the stop loss closed at $807.43. So while Eli Lilly, it also underwent a very long period of consolidation since February, and recently it just broke out of its range, highlighted in blue. And this came after it formed an ascending triangle as well, prior to the breakout where there were higher lows being formed, which suggests that buyers were willing to buy at higher prices. So that gives us a bullish view with increasing momentum on MACD and RSI as well. The price could reach $860, the target level, which is taken by the high of the range, which is $67 projected onto the breakout level at $793. And last but not least is a technical buy of Franken at $1.47. Take profit levels at 158 as well as 166. And the stop loss at 139. The stop loss goes at 145 on Friday. So looking at Franken's chart, it also broke out of a downtrend channel recently highlighted in blue. And this came after price from a higher low support at $1.36. Also, there was also bullish divergence and increasing momentum recorded after the price made a lower low into the channel support recently. So this is a bullish view for price to reverse its bearish momentum to a bullish one to possibly hit these two take profit levels, which were prior resistances. So this is just a summary of the trades initiated. Currently, Coinbase is about 5.5%. Eli Lilly and Company is about 0.5%. As for Franken, it's currently down about 1.3%. And so that's all from me. I'll hand over time to Paul to talk about Singtel results. Thanks.
Yeah, okay, thanks, Zane. Move on to Singtel's results. For their FY24 results, I'll just discuss the fourth quarter. As the title suggests, down under is turning around. So the Optus is finally turning around with higher margins after several quarters of weakness. Next slide. So I'll move on to the Singtel results. So the fourth quarter was within our expectations. Revenue, the EBITDA was above because mainly due to the higher margins at Optus level. So if you for the positives, you will notice that there was a margin recovery in Optus. You look on the table on the left, there's a 5% improve, 5% growth in EBITDA. Although the revenue declined. One of the reasons we believe is that is due to the headcount. They aggressively actually cut headcount by 12% to 6,003. I think this is the most aggressive they ever been. And this is part of the so-called cost down that they are planning for Australia and also Singapore. And the other recent news is that the mobile pricing, I think they just messaged us, but the mobile pricing in Australia is also starting to climb back, or mobile prices. The negatives for Singtel's results was mainly the weakness in Singapore and NCS. So for Singtel Singapore, you look on the left, is they combine it. So it's inside it used to be the enterprise and the mobile business. One of the weakness is mainly because of the legacy voice. Yeah, I think they still have a couple. I think 70, 80 million revenue, if I'm not mistaken, still from the legacy business, legacy voice. So these are enterprise or corporate still using a fixed line voice. So that's one of the area, and that's structural decline. Surprisingly, actually, mobile ARPU actually went up for them because of roaming. I guess all of us are paying too much roaming to them. But anyway, the other thing is a weaker equipment revenue, but it's still a 3% decline. The other weakness was NCS. So NCS is their IT services. Just to recap, 2 years ago they separated NCS into a separate company. There are many IT services. Something similar like what you see in some of the Indian IT companies. Well, at least they're trying to emulate that. So for that, they separated the separate company and they plan to do an IPO in future. So in terms of outlook, we're still positive on them. We think there are a few share price catalysts. Firstly, there's a 200 million cost down, like we mentioned earlier. They already started to do it. So headcount combined is down 7%. We also think there's a 300 to 400 million EBITDA opportunity. This is our own estimate for GPU as a service. So Singtel has announced that they are working with NVIDIA to set up a data center with GPUs only. So we'll discuss a bit of that later on. They also plan to do asset disposals, something like what Keppel Corp did, and hopefully the share price move. Some of it is to sell some of the associate stakes that they did, like for Bharti. And the other third driver is that we think the associates earnings will recover. There are a few reasons, because if you look at the report, our monitor was delayed, but if you look at the report, you will notice that the earnings was down because there was they were hit by currency in Nigeria, because Airtel has exposure in Nigeria. So that will recover. Number two, Bharti is still recovering. I think their mobile prices are up almost 8% year on year. So that's another driver to the earnings. So that's some of the reasons why we think the outlook is better. And so we maintain so they are planning, they have a 6% dividend yield now they're paying, but this includes a special dividend. So they announced this very unique special dividend, but this is this is going to be paid 3 to 6 cents per year, and they think they can pay this for the next 5 years. So I think they don't want to they term it another name, so I just slipped my mind, but they didn't want to call it a special dividend, because they always know that these days if you announce 5 cents special dividend, your share price just drop 5 cents the next day after you pay out. So they're just trying to separate it and call it like a interim special dividend, so that to let people know that this special dividend will be maintained for the next 3 to 5 years. The name of it is called the value realization dividend. I'm not sure what that actually means, but just think of it like a special dividend that will maintain for the next 3 to 5 years. Next slide. So next is LHN. They announced their first half results. So their co-living profits tripled. So that was on, and there's more growth expected. Next slide. So for LHN, so in case some of you do not know, since we have time today, not so rush. So LHN they have industrial properties, they have commercial properties, normally work plus store. And the big growth driver now is co-living. So co-living is namely through their co-livu. So co-living means it's between a hotel and a service apartment. So for hotels, you can stay, day rates, you can stay 1 day and leave. But for co-living, there's usually minimum of 6 days. You must stay at least 6 days. The average stay period for them is, I think, 3 months. Whereas for service apartment, you got bigger unit, but it's usually 6 months and more. For co-living, since we have time, so for co-living or co-livu, you actually get full service. So inside your unit, you will still get a washing machine. You won't get you can cook in there. You have TV, you got internet. Everything is a move-in condition. So that's the attractiveness of it. But anyway, going back to the results, it was within expectations. The earnings was a bit higher than we expected because the co-living earnings you see on the left here tripled. So again, the positive was that the Hollywood earnings tripled, and mainly because there was a growth in keys. So if you look at the table on the left, under keys, there's a 28% growth. And we estimate there was a 70% jump in room rates, mainly because, not because they raised all their rooms 70%, but also because they opened this new Hollywood in Orchard. And of course, those, they can get like 3,000 per month. I think they are averaging for the group, around 2,000 per month. Which is still cheaper than a hotel and cheaper than a service apartment. But of course, the space is smaller than a service apartment. The negative is the weaker facilities management. This is a bit more idiosyncratic because for Hong Kong, they also run car parks. I think they got like 20,000 car parks, Hong Kong and Singapore. So that went down because they had some car park grants in Hong Kong, and then now this year they don't have it. But next year should improve because they are still growing their number of car parks to more than 20,000, I think. Yeah. So we raised our FY24 earnings. We think 2025 will be even stronger because they got visibility on some of their co-living. So co-living, usually co-livu, so they actually lump, you'll notice this thing called 700 Healthcare. So I think few months ago, they actually secured a contract with the Ministry of Health to actually house nurses. So this is something similar to workers' dorm, but of course it's better facilities, and that's why they actually won the contract because of their experience in doing co-living. So this is another 800. They still have plans to roll out at least 800 keys per year next year and the subsequent years. Some of it will be also third-party management. So they're also starting to take on third-party, which means they don't earn the land. Something like this healthcare, they don't earn the land, but they will manage it. So this is something they plan to do. Another boost to their FY25 earnings will be, it's a bit one-off because this is property development, but they're going to sell 45 units of this so-called food processing industrial, more like food factories. They say the demand is actually very strong and they're going to launch it in FY25. Yeah. So the company is paying about 6% dividend yield, 5 times PE and 40% discount to book. And next slide. So I'll move on to Netlink. Oh, okay, so just to recap, Netlink, in case some do not know, so all of us, every one of us that have a broadband in our house, we actually pay 13.80 to Netlink. Of course, now dropped recently. I think in end of last year they dropped it to 13.50. So we don't pay directly to Netlink for the fiber broadband that we use, but we pay to maybe Singtel or StarHub, and Singtel must pay this 13.80 or 13.50. Sorry, this is regulated fee. So the results within expectations, and you should assume the next, I don't know, 5 years, the results are all going to be within expectations because the growth is usually only 1 to 2%. The positives, the rebound in residential connections. So you look on the left, most of the revenue or profit, almost everything, all comes from residential connections. That means people like us, the 1.4 million households that pay them. So that's why there's a rebound in connections. You will notice the connections, although rebound is not high, it's only at 1.5, but in the second half, it was actually very weak. The negative is the finance cost. So finance is up 19%. That is also affecting the distribution. But underlying, they still managed to raise the dividends. So just to recap, So the dividends is paid from this category called cash flow available for dividends. But because you are a business trust, so as a business trust, you can actually borrow money to pay shareholders. Not like a REIT. So REIT, you cannot borrow and pay. It has to be based on whatever rent you collected, I mean, in a nutshell. But for a business trust, you can borrow and pay. So that's why, although 2025, the cash flow will be weaker, mainly because, like I mentioned, 1380 to 1350 effective 1st April of this year. So their FY25 results. Second reason is the capex is going to be high. So there still used to be 70 million. So their capex is now around 100 million. They're paying the capex for a new central office. So central office is, for all our broadband connections will end up in a central office. So they're building, I think, the 5th one, if I'm not mistaken, in Sengkang. So that more households can get broadband. Otherwise, those from the north, very hard, it will take a long time and it will affect the speed, it will affect the delay, latency. So they have to build a new one, but all this won't generate revenue for them because once you build new, it takes time to generate revenue. And then of course they'll be impacted by higher interest rates. But even though capex is not a worry in the longer term, because whatever capex they put out, they will get a return with the authorities. I think the WACC, I should know this, but I think the WACC they generate about 10+%, if I'm not mistaken. But so even though they spend 100 million, the authorities will let them recover that with the WACC. Through higher rates. Yeah, so that's why they don't mind. But near term, the distribution, the cash will be weaker, but they can just borrow more, which they've been borrowing more to pay. So we maintain neutral. They have a yield. So this stock, like I said, is if you're very risk averse, it's almost like a bond because this the so-called domestic owned and also or Singtel owned, and also it's supported by the ability to pay the borrowings. And it's a very recurrent business now because every month they're going to collect 1350 from 1.4 million households. The only negative is probably in FY27 because of the 800 million debt they have. I think 3/4 or 510 million they managed to do something amazing. They borrow it at 1% interest rate just before the interest rate rose in FY29. That's probably the best thing they ever, one of the best things they did. But this one will only renew in 2026 or FY27. So only then, like 1%, of course, it has to go up, right? Can't be like 1%. So that's the only time where it could hurt their cash flows a bit more. But again, like I said, they can always just borrow to pay. Next slide. So I'll move on to our usual weekly. Industrial production is still weak in Singapore. I mean, not much growth, which is a bit surprising. So although manufacturing is recovering, if you look at exports, it's still quite sluggish. It's not like a very strong rebound that you see here. So there was a lot of China numbers. So again, China numbers are not very bullish. The retail sales in China is 2.3, a bit slowing down from March. And if you compare to pre-pandemic, I mean, before all these things, so China's retail sales usually grow about 8%. So it's like the best consumer story in the world. But of course, maybe not now. Although some of it is inflation, but even you take 1-2 percentage points because of inflation, it's still very weak number in China. Residential sales in China is still very weak, about 26%. So no change. It's still sliding. Year to date 26. So the other, if you recall, Li Keqiang, I mean, who has sadly departed, but he used to have this Li Keqiang activity indicator where you always say you want to monitor activity, look at freight carried. I think this is railway freight, so that is also very sluggish. Just to give you a sense of the economic conditions in China, so it's still very sluggish in general. In the US, there was some loans growth. Of course, 1.1 isn't great, but it's still the highest in 11 months. And durables. So if you want to know corporate spending, this is one of the indicators we use. So this is also, I mean, it's up. I mean, it's not like fantastic, but at least it's still a bounce. Yeah, next slide. So in general, most of the data points is quite weak. Okay, so NVIDIA, I mean, we do cover, but I think John is on medical leave for a few days, so we can't get a note out soon yet. But anyway, in our weekly strategy, which you should get, because morning note, we had some issues with MailChimp. But anyway, in our weekly strategy, in terms of the NVIDIA, the earnings spiked 7 times, and they're also guiding for revenue, second quarter revenue, to actually double to 28 billion. and what can support them is in the second half, they got this new chip. So right now, all the chips that they are supplying to the data centers is the H100 or the Hopper chip. So they got this new Blackwell chip, which is supposed to be like double the processing speed, or I think it's more like joining two chips or any. And what is helping? So why are they doing so well? Just to give some understanding to everyone, why the GPU chip? So a lot of it is coming. Some of it is coming from auto. So they actually mentioned companies like Tesla is buying NVIDIA chips to incorporate AI into self-driving. LLMs, like ChatGPT that we use, so they are also using the GPU chips. Of course, there are many other large language models, not only just ChatGPT. Life science, of course, medical is using. Then social media, like Meta, they mentioned, is also doing a huge AI with the GPU. Of course, there's only one GPU to use. I mean, so it's no surprise everyone. Then there's a lot of startup Gen AI companies. So generative AI, a lot of startups, and a lot of them also are doing a lot of learning, training of their database. So they all need the GPUs. And the new category is sovereign countries. So countries, maybe like Singapore, let's use an example, they have got some unique data probably on all of us, so they want to use some AI on it. Yeah. So why we're bringing this up is that it's also creating some new industries. So there's, internet in the past was just about distributing data. So right now, with AI, the AI can create data on its own. So by doing that, you need computing power at the data centers. So there's this new GPU as a service. It's not like totally new, but it's now coming into Asia, and then we see like data centers equipped with only AI chips, and this is an opportunity for Singtel and HTL. YTL, sorry, YTL. I mean, this is a Malaysian stock, but these are some of the companies that are beginning to see this huge boost. So what they do is that you can, let's say you have 100 megawatt power, then you will rent the chips. So you sign a contract with NVIDIA or Singtel, and then you can rent it at maybe $2 or $3 per kilowatt hour, because you want the processing power. Yeah. Okay. Let me move on. So in terms of interest rates, just one last point here is that the narrative right now is still for higher for longer. Because the recent Fed minutes even mentioned that there's a willingness to tighten. That means there's a willingnness to even raise rates if necessary. And then recent Fed speak, there's a lot of Federal Reserve every day, every week they're all talking about. Of course, we just want to monitor those who are the FOMC members. So those who can vote on whether to raise rates or not. So all their comments has been, one has been several more good inflation before they think about it. So inflation is still too high. They want to see inflation coming down more before they actually decide to cut. Another said that any cut they will do is probably by year end, and then another will be a few more months of inflation data before they decide. So coincidentally on the 31st of May, you get this big inflation number, the PCE. The market expectations is 2.8. Anything lower could see the market rally. That means there's more chance of a rate cut. Okay, and in green are some of the results that we cover. Yeah. And tomorrow we have this Winking Studio. So if you want to know more about the gaming industry, you can dial in. What Winking Studios does is that they are actually owned by Acer, and what they do is they do graphics outsourcing. That means, let's say if I am a gaming company, I want to do graphics instead of doing it in-house, I would outsource it to some companies like Winking Studios. So if you're interested, do dial in for it. Okay, I think with that, yeah, thanks. Today's a bit shorter because most of our team members are either MC or on leave. Yeah, we can move on to Q&A. Thanks.
I'll just take some question. Since CDR result shown is good, will it be possible for it to add it back to MSCI index? Yeah, it just got removed, so it probably will take a while, and probably the market cap has to improve as well before it will be added back to the MSCI index. Yeah, so not anytime soon. Yes, because they also just got removed only. CDR's gearing and ICR, should there be concern since it has been given a buy rating, and what is the recommended standard limit of gearing and ICR? Yeah, so they do not have any limit because they are not a REIT. So they do not effectively they do not have any limits, but it's best to have it not so high. But the thing is, for us, we don't think there's any concern because they still have a strong cash pile of 2.4 billion and they still have more undrawn credit facilities as well. So if you add both of it together, they have about 3.7 billion. So yeah, they have enough liquidity to pay off this debt as well. So yeah, uh no issues with the loans or yeah repayment and such.
And probably the
Um,
LTV too, right, Darren? Because they are
uh,
value the land.
yeah, yeah. Um, yeah, I think that's all. Yep, I think that's all from me. Yeah, thanks.
Yeah, okay. Yeah, thanks, Darren. I'll try and answer as many as I can. There's quite a lot since no one's around. Yeah, okay. But please update on Citrum. So I think there was already a rumor out there. I think we mentioned it. I think last week. That because of the change, after paying off this Operation Car Wash, that they would eventually get something from Brazil. So for those who don't know, they awarded 2 FPSOs to Citrum. There's a rumor. I mean, Petrobras has mentioned they're looking at 13 FPSOs. But of course, how many are new? How many they're going to reuse from the current ones? It's not clear. But their 2024 to 28 target is looking at 13. So there could still be a few more coming up. And most times they'll use Citron. I think, okay, so if you don't know the background, the Operation Car Wash was with the previous Brazil government, which left, and then now they're back again. So I guess you can connect the dots. Yeah. So with this, I think there is possibility. I mean, if because Petrobras their roadmap, I think you can just go check it out in the media. They are trying to roll out 13 more. Yeah. They are coming out with the results tomorrow. So tomorrow morning, then again we will do the usual Phillip on the ground just to update everyone. Okay. Nvidia 10 for one split. What's your thoughts on whether to buy the share now or after the split? Again, we don't see much difference. I think if there are, I really do not know because it's like we always say, share split or bonus issue is like you cut one cake 10 times or you cut the cake 5 times, it's still the same cake. So that's why for us we don't see any difference, but maybe some with the smaller unit maybe is more people. Of course there's fractional shares. I think even Phillip is doing fractional shares. So maybe with after the split it could be more people can buy. I really do not know because maybe some companies still can't offer fractional shares. So it could be made more available to other people. I'm just making this up, but in theory there shouldn't be anything. I know it's the same cake anyway. Yeah, so it's the same cake, the same Nvidia cake. Maybe now got more slices, but it's the same. But if I had to bet, maybe after the share split, in it could be better. I guess more affordable. Again, I'm just making this thing up. Nothing to prove it. What news costs Amazon? Okay, I don't have it because our analyst is on leave today. I'm going to copy this question. Then when the analyst is back, I told her to post this in our P3 community chat, which should be on our slide later. Can someone just flag that out? We'll post this question to be addressed. Yeah. How many keys are there in LHN's MOH workers dorm? Okay, there's actually only 300 plus actual keys. But what they charge is actually per person. Yeah. Zane, can you flag the community page? Yeah. Yeah. So the sorry. Yeah. So that's why that's why we put 700. The actual number of actual keys is 300, but the contract is take or pay. So whether there's actually 700 nurses or only 2 nurses, I think the contract is that the LHN will get paid for it because they set up the infrastructure and everything for this. That's how it's done. Why there isn't growth expected for Netlink? Okay, sorry, I lost the question. Why isn't there? Okay, sorry. Why isn't there growth expectation for Netlink with the expansion of data center? Okay, there is some growth, there is some connectivity to the fiber, but it's still very small. It's hardly, I think, don't know, 3 to 4%. Kind of very, it's very small. It's hardly moved the needle, but it's a valid question. Yeah, it's their connectivity. I think it's only 3 to 5%. Yeah, it doesn't really move the needle because because 100 over million, so that one maybe 1 or 2 million extra if they get it. But because it's just a connection, the reason is that it's not just the connecting the fiber is one thing, but the main value is the electronics behind it. So since we have time, so even though like we asked them, like all of us are moving from 1 gig to 10 gig, right? So on paper, it shouldn't be more business for Netlink. It really doesn't, because to move from 1 gig to 10 gig, to get that kind of bandwidth, it's mainly the electronics that the telcos are putting. So the fiber you don't need to make the fiber bigger or stronger. It's already available at the 10 gig. So it's more the electronics that connects things. So that's why it's the same thing for the data centers. It's not so much the fiber, it's the electronics behind the fiber. Okay. Can you refresh LHN missing the dividend? Yeah, the dividend is 6%. Yeah. Okay. What's your take on Hong Kong land? Okay, for me, I kind of like it. I mean, the only reason is because all the bad news is there. I think everybody knows the occupancy is coming down. I think the occupancy for Hong Kong land, prime occupancy is probably 10% vacancy, which is like, I think some record high or something in central Hong Kong. Singapore vacancy is, I don't know, 1%. I mean, but this one is 10%. So it's like, and this is central Hong Kong. I don't have the number offhand. I need to check my notes. But so for me, is this a really deep value stock also? But you just have to wait, because I don't think the occupancy will come back in, because there's still new supply coming in Hong Kong this year. I think what they mentioned is that after that, there's really no supply. So you just have to wait for the vacancy to start to come down, because there's no more new supply and so forth. So that's why I find it attractive. I mean, it's deep value, all the negative sentiment. Everybody knows Hong Kong office is performing poorly. Yeah. But again, it may not be for everyone, because everybody wants to know what can do well the next month or something. Yeah. Okay. But for me, it's a really deep value stock. Yeah. Because the discount to book is probably 50% or 60%, if I'm not mistaken. I need to double check. Okay, leave it. There's one for Darren. I'll answer this one more, then I'll leave it to Darren. LHN versus Centurion. Despite good future income streams, why is LHN moving slower than Centurion? COVID is to be. Yeah, I think for Centurion, they have a bigger exposure to the workers' dorm. So the worker dorm rates now is, I think, move from 400 to now almost 600. Maybe 300 to 600. So the worker dorm rates actually even stronger than LHN. Maybe LHN up 70%, but the dorms in Singapore have doubled. I think right now, of course, they won't charge everyone 600, but it's about maybe 500 plus. Yeah, and all this type of business, right? Once the dorms are there, you will just go straight down to the bottom line. Yeah, but for LHN, it's more these are new dorms that they had to build. So of course you got to incur additional costs, but the earnings upside is stronger for Centurion, because I mean to pay more. I don't think they're going to like put an additional aircon for the worker, right? So you just charge more and then just go straight to profit. So that's why the earnings for Centurion will be stronger in that sense. Yeah. Okay, Hannah, I think the next are all for Darren. Yeah.
Yeah, thanks, Paul. What is your view on Mapletree Logistics Trust? Shall shareholders take the scrip dividend? Yeah, so the scrip dividend, if I'm not wrong, is at 133. Yep, and for Mapletree Log, right now their portfolio, they are hit heavily by the performance in China. So in China, because during COVID period, they expanded a lot, and as a result, now a lot of these e-commerce, rather the e-commerce players, they expanded a lot during COVID. So now the demand has has dropped, and a lot of e-commerce players, they are consolidating and reducing their space. So as a result, the demand for Chinese logistics in China is also lower, and there are a lot of tenant incentives also in China. So that hurt the rental rates as well. And there's also subdued economic activity and a lot of new supply as well. So all these are affecting the rents in China for logistics. So that is the headwind. But the rest of the portfolio is relatively resilient for MLT. Yeah, we just need to see a good recovery from China side. So China accounts for 20%. So shareholders take up the scrip dividend. Yeah, it's not really significant though if you take cash or scrip dividend, but if I were you, I'll just take the cash. Yeah. What is CapitaLand investment and UL gearing? So CLI's gearing is about 53%. UL's gearing is about 25 times. What is your take on REITs and property stock now with the lesser number of rate cuts and or the delay in rate cuts? Yeah, so for REITs, we are still it's still one of the sectors that we favor for the dividend yield, and because of the fact that the price to NAV, the valuations are trading at even below COVID-19 levels. So they're trading cheaper than price to NAV wise as compared to COVID levels. So we think eventually it will return, it will recover, but it needs a catalyst, and this catalyst is just with the lesson of rate cuts, probably is the catalyst has been pushed further back towards the end of 2024, even perhaps 2025. So the share price might remain flattish for a bit, but eventually we believe it will recover. Like the interest rate cuts are very important for REITs, mainly because of four factors. Higher with interest rates cuts, the property valuations, the cap rates probably will compress, and valuations will start to improve, and they will also get lower financing costs from the lower rates, and with lower rates also the positive carry might come back. So basically that means is because of the lower loans, you can get that spread between the rental income you collect and the lower interest rate, that lower cost of funds rather. So you can get back the positive spread. And as well, dividend yield spread also will likely increase with lower rates as the 10-year yield comes down. So yeah, the rate cuts will really help benefit the REITs. Property stocks as well. So with cheaper money, yeah, the demand for property might start to pick up as well. Please list the top 3 REIT picks. Yeah, so for those we cover, we like Cromwell, FCT for its resilience, and CapitaLand has got trust for the recovery in hospitality as well as its geographical diversification. Any update progress on Capital this week? Yeah, no update since its first quarter results or first quarter business update. So as of now, 8.5 months of rents have not been collected from the Guangdong data center tenant. Yeah, no updates for that. Yeah, but the rest of the portfolio is still resilient, and they're still getting positive rental reversions for their leases. Okay, can you share on Cromwell on their new sponsor? Still good to buy? Yeah. So actually Cromwell, with their new sponsor, we think it's a better deal for them because this new sponsor Stoneweg, they have a good presence in Europe as compared to Cromwell previously. Like the Cromwell property is more focused on Australia, but this Stoneweg, the new sponsor, they have a lot of ties with Europe and the European banks as well. So they did their valuations on the Cromwell European REIT, and they thought that at this price that they acquire, 1/3% of the share, like 27%, if I'm not wrong, of the shares at 150, they think is still a good deal because they did their valuations and they think is the intrinsic value of Cromwell is probably around $2. So which is why they decided to go ahead with it at about €1.52, €1.52. Yeah, and because with this new sponsor as well, Stoneway, we think they might have some assets in the pipeline that they can put in, as well as they might get a cheaper credit as well from their banking relationships with the European banks. They might get better credit spreads. So probably cheaper loans, but not very significant. Perhaps 10 to 20 basis points cheaper loans. So yeah, we think this new sponsor is beneficial for this for Cromwell European REIT. They probably might change their name also, but yeah, that is when everything is done. Yeah, I think yeah, probably hand over to Zane for now first. Yeah, thanks.
Thanks, Darren. I'll start with the TA. So first question is on Teva Pharmaceuticals. So currently, I think it's doing some sort of a range consolidation for now. With the resistance at $70 still holding. But this might be sort of an ascending triangle in the process. So I think for now, maybe some consolidation first, and then could resume the uptrend afterwards. Given that the counter has been trading in the uptrend since October of last year. Next one is on SoFi. So for SoFi, I think currently still I think price action wise still quite subdued. Still finding resistance from this downtrend resistance line over here, lower highs. I think the key is to see whether the support over here at around 680 will be able to hold. Since there was some sort of recovery, a bit of recovery after the earnings gap down over here. Price has held this 680, 690 level, but recently came back down to this level again. So yeah, if it holds, then there might be some chance for some slight rebound, but I think it will be still quite modest, maybe a retest of 720 about there. Yeah, as good, but I hit some resistance over there. Okay, next one is on Dell. So I think Dell overall is still very strong. I think it's still making the new all-time highs after the breakout of the resistance at 134, 135. And also recently there was a bit of consolidation going on at 150, 151, and price broke out. So yeah, with that, I think likelihood and momentum will still continue to be very strong. Going ahead to continue the uptrend. Okay, then for AMD, I think currently just perhaps some sideways trading. So it did a retest of the previous swing high resistance over here at 161. Currently still holding as a support. So maybe some sideways consolidation first before price could hit higher. With some resistance currently at 172, which was this horizontal resistance back then in start of April. And as for Qualcomm is also exhibiting strong momentum currently. Yeah, still just making, I think, new highs as well. Likelihood momentum is still likely to continue to be bullish and likely to see new highs ahead. for block, I think block currently is still I think in continuing to pull back. We still seeing the trend of lower highs, lower highs and lower lows, as well as recently there was a breakdown below 70, 60 this level as well. So we could be seeing maybe some further downside if the swing low over here at 65, 70 is unable to hold. And afterwards, the next support lower down could next support lower could be around $62 about there for a block. Okay, hi, BY. T for Marvel. Okay, so Marvel, I think overall still trending very well. After the break of this $70 level, price went up. Did a retest of the resistance over here at 75, 76, and then some sideways consolidation before moving higher. So I think with that likelihood is that price should be able to continue moving upwards to test the next resistance level at about 80 or 80 to $81 over here. Okay, then for Pfizer, I think it did retest some resistance level here at 29.40 and some slight pullback. Maybe we see some consolidation over here first, but I think likelihood is that should be able to continue its uptrend. This recent bullish momentum upwards again will test the next resistance, which is around 29.80 to $30.10 area. Okay, the next one is 1038 Hong Kong, CK Infrastructure Holdings. So for this, I think okay, so recently still holding resistance at 47.50 over here. Then today there was a gap down because of the dividend distribution. So I think with that, is currently doing a retest of the prior this support level over here, which is around 44.50. So might see some bounce coming in. Some bounce coming in with maybe current resistance will be around 46.50, 46.60 about that. Yeah. The next one is on Samudra Shipping. So Samudra, I think it's still trending, still in its uptrend, trending every day it's going up slightly for now. So it currently is tested another resistance at 99 cents, which was a swing high back in April of last year. So over now, there might be some consolidation, but I think as long as this trend continues of higher highs and higher lows, we could still see price continue to move on to test a higher high, which is around $1.03 to $1.05 area. Yeah. On to city developments, I think for now, I think price action wise might be still quite sideways, still finding resistance at 590, which is this breakdown over here when there were news broke that was released, removed for MSCI. Then afterwards, price retested it at 590, but still unable to clear it. So I think for now, maybe some sideways consolidation with near-term support around maybe at 575. Next is on Keppel. So Keppel for now, after the price came back above 665, still holding as support. But for now, I think with this trend of the lower highs, there might be still likelihood is that it could do some sideways consolidation first with resistance right around about the 680 area over here. And then for Aztec Global, slight pullback after testing this $1 resistance level. Price currently back test 96 cents, so might be doing a bit of a range over here for now with some slight weakening of this uptrend momentum. So maybe some slight range bound trading with resistance at maybe 98 cents, 99 cents for the time being. Okay, then as for semiconductor industries, I think recently this kind of broke down of this wedge consolidation over here. So with that, I think maybe some subdued momentum for the time being could do a retest of the swing low support at around close to $5 over here, which was previously a strong resistance. Then might do some sideways or trend lower afterwards. And given the recent trend of these lower highs being formed as well. Okay, next one is on Capital and Ascenders REIT. Okay, for now, I think it's still, I think it's doing some sideways consolidation for now. I think looking a bit better because after this double bottom at 253 price, to test the resistance at 265 few times. Currently, we see a higher low over here in the recent resistance at 260, 262. So if you can continue to hold this higher low, I think there could be a chance for price to trend higher towards 270 things. Yeah, but for now, it's still some sideways movement. So let's see how it goes. Okay, next one is on out for NVIDIA. Okay, for NVIDIA, I think still the chart wise is still looking very nice. Prior to the earnings, it's trading in this uptrend channel. Then afterwards, we saw new all-time highs breaking out of this 965 resistance. Yeah, then and as of now, the price action on Thursday and Friday still looks good. On Friday, with this close near the at the highs of the Thursday day high level as well. So that likelihood is that price could continue to trend higher, given it's the new all-time highs and no resistance. Not much resistance for now. For MTA for Tesla, Applied Materials, Baba, JD, and Meituan. Okay, so for Tesla, I think could be a bit sideways for now. So after price went to test the resistance of 186, there was a pullback, and then price didn't manage to hold 180 over here. So there was a retest on Friday, but could meet some slight resistance for now. I think price might just trade sideways for now with support at around 171, 172 area. So maybe some sideways consolidation going on. And then as for it's currently just some sideways trading. So I think that could still continue. With the prior resistance over here at 109, 110 holding as a support, but resistance is 117. Yeah, so I think for now, maybe some sideways trading. If you can break upwards again, then next resistance level to watch out for will be around 122, which is quite a strong resistance level given the amount of times it tested as support previously. Okay, then for Applied Materials, I think for now it's still trending well over here after the breakout of 213 resistance. So we could still see the trend actually continue over here to trend higher. Now currently price is also still holding along the 5 to 10 day moving average area for now. And support will likely be around 215, 216 over there. Okay, next one is on Alibaba. Alibaba, some pullback recently from a resistance, which was this trend line over here. I think for now, likelihood is that could do some sideways over here, given that it's doing a retest of this area where it was quite a resistance in the past and price broke out. So this is around the 77, 78 area over here, prior resistance. So upon the retest, likelihood some bounce or some sideways ahead. With current resistance probably around 81 for now, 81 to 83. As for JD as well, also currently retesting near this prior resistance level at 116. So I'm expecting some bounce to come soon. But short-term resistance could lie at this 122, 124 zone over here. This range support over here, which price broke down on. And next one is Meituan. Meituan also currently price action wise broke below this 120 level, which price broke out. So I expect a little bit maybe further downside to test the recent supports at 112, 113 over here. Then maybe price could do some sideways consolidation afterwards. If 120 is a short-term resistance. The next one is Walt Disney. So I think for now Disney still after the results kept down over here, momentum is still pretty weak with the lower highs and lower lows being formed. Currently also last week after a long consolidation on Thursday there was a breakdown below 100, 203 over here as well. So I think that we could still see maybe some slight further pullback, but I expect some support to come in once if the price retest this 99 level over here, which was this closing price before the gap up following its earnings. Yeah, so if it does feel this price gap, I expect some support to come in for some slight price rebound. But like resistance wise, I think still be around 100 and 203 for the time being. The next one is Freeport McMoran. So for Freeport, currently there was a breakout of this range resistance at 52. Currently doing a retest, so I'm expecting some sort of a bounce to come in. Also like quite near this this trend line support as well. So confluence of supports, I expect some bounce with some short-term resistance will be this gap over here at around 53.60 onwards. For BlackRock, okay, for now, hit a resistance level at 815. Then currently price has been pulling back since failing to hold this support at 793. So with that, we might see price come a little bit lower to test this area between 770 to 778 over here. Then afterwards, price might find some support and do a bit of sideways. Okay, next one is here on Mapletree Logistics. Okay, for Mapletree Logistics, I think nothing much has changed. For now, still quite sideways with resistance still at 139. So still need to wait to see whether there's a break above it. But I think just holding on in a sideways formation with support at 133, 134 currently. Yeah, so nothing much for now. Okay, the next one is AEM. I think AEM has looking a bit better recently. Since it has begun to trade in a sideways fashion, still finding resistance at this 193 level, but for now, price, I think you can consider this as a higher low, going from at 184 as compared to this 180. Then previous these 2 days, the price wise the low is at 188. So another higher lows. If price can hold around here, then there could be a chance for some further rebound if price breaks this 193 level. With the next key resistance probably around about close to the $2 to $2.02 area over here. And then for CLI, CLI some pullback recently, but we tested this 260 for this prior resistance. This 262 to 264 prior strong resistance area. So expect some bounce to come in. But they may reach up straight sideways with resistance at 268 to about 272 currently. Okay, next one is on OCBC. So OCB is getting last week was pretty sideways, but the trend wise is still intact. Just another retest of the 10-day moving average. So with that, should be able to find support and move higher, I think. But yeah, so I think the uptrend is still intact. Could continue higher. Short-term resistance could still come from this trend line over here. That will set it at about 1460, around 1460 about there. Okay, then I'll just talk about the two other local banks in time as well. For DBS, also quite similar, quite sideways last week. Still holding at this breakout of the prior level at 35.45. So I think it's still looking quite good. Also holding along the 10-day moving average as well. So with that, I think should be able to keep higher highs again for DBS. OB is slightly weaker, but for now I think it's trying to hold above this $30 resistance, which was this support breakout here, a bit of resistance. But I think with that, could continue to move higher to test this high at close to $30.80, $30.90 again. Okay, next one is on dairy farm. Okay, I'll give the TA perspective on that. For dairy farm, I think currently it's downturn wise it's still in the downtrend, but for the short term, it's probably in this bit of a range consolidation. Still finding the key resistance to clear is still around 195, which was this support level breakdown. And then price has been just consolidating for now in this range. So I think as long as if you can hold this higher low at 181, it's still okay. Maybe just consolidating between this 181 to 195 area for now. Yeah. The next one is on HP. So HP recently has been on this run over here, breaking above the resistance at 31, then also hitting the prior high at about 33. So over here, you might see some sideways consolidation for the time being. Then afterwards, could continue to move higher. With the next key resistance at around about 35 about there. The next one is on PNG. So PNG, I think for now we could see some consolidation. Price action wise started to look a bit weaker with the break below 10-day moving average. Also below this his swing low of 166.8. So with that could do another retest of this support at 164, about 164 over here, then might just do a bit of a sideways consolidation. For Walmart, okay, after the earnings gap up, price has been climbing a bit steadily for now. I think current price action is still looking okay. In the past few days, breaking above this resistance at 64.80, and price holding this level. So with that, I think still upward bias as long as price can break this 65.70 could still make a new high. Okay, then for Costco, also looking good as well. Breaking above the 786 level. Then price did a bit of range consolidation, but that looks like on Friday trying to break above this 804, 805 resistance area again. So with that, I think likelihood is that for price to continue to trend higher and make new highs ahead. And then for next one is Coca-Cola. So for currently, I think it's a bit some pullback in terms of the momentum. Price failed to hold the key level at 62.80 over here. Some further pullback. So I think we might see price pullback slightly further to test the stronger support over here at 61.40, 61.50. Then maybe some rebound, some sideways afterwards. Okay, then some of the US banks, Bank of America, breaking above 38.30 over here, then some sideways consolidation. Okay, then I think with that, price could still trend high to test the next key resistance, which is around $40.20. Yeah. And afterwards is 41, sorry, around close to $42. Then for Wells Fargo, some weakening in terms of price action recently. Failed to hold this previous high 61, the price coming a bit lower. So that I think might see price test this lows near 59 again. Then maybe some sideways afterwards. And for US Bancorp also over here failed to hold this 41.60 level over here. Then price came down again. Then also like breaking below this $40.50 level. So with that, I think short-term wise could still continue at this pullback over here. Yeah, we still continue this pullback over here. Maybe if it still trends a bit lower, we could see a test of the stronger support here, close to $39. Then for Citigroup, okay, for now I think it's still undergoing some range consolidation. As long as price stays above this breakout level of 62.70 is still okay. So for now, just range of resistance at 64.30 to 65 or that. Okay, then I think I'll just go through JP Morgan as well. How the US banks. JP Morgan, I think currently did a retest of the 199 previous resistance level. For now, it's still holding. So as long as it still holds this trend line, I think it's still okay for some rebound towards 204, 205 again. Okay, hi. It's your view on Jaffa. Okay, I'll give a TA perspective on that. For Jaffa, I think currently it's currently in this uptrend over here. But I think it's doing another round of range consolidation, likely similar to what we saw over here. So currently it's just bound between the about 30 cents to 34 cents area. So you see if there's a breakout gain, then the price could resume its uptrend. For now, it's just some sideways trading. The next one is on ExxonMobil. ExxonMobil, I think some weak price action recently. Lower highs, and then price tried to break above this 118 level, but was met with this selling at the end. Then tested this close to this support again at 112, 113. So with that, could see some sideways over here. If it can't hold this level, we could still see further price pullbacks towards about 110 about there. Yeah, so for now, some weakening in terms of the price. For Chevron is doing some range bound consolidation. So it's coming back to this range support level, which is about 154 to 156 area. So over here, we might see price do some rebound again for this key support. Then as for Shell also quite similar to Chevron earlier. It's holding this range formation over here. So close again to the support of about $70. So we might see some rebound coming in at this level. Short-term resistance will be this 71.40 area. Okay, then some other Hong Kong counters, 700 is 10 cents. So 10 cents also doing some pullback recently from this resistance of about 390. So has another test of this this range level which it broke out of at 370. So about this 356 to 370 will be the current support where price will do about bounce from. The short-term resistance for now will be about 380 level. Okay, then for next one is Baidu 9888. So for Baidu, for now is some weakness after the breakdown of this range formation support at 105, 106. But I think looking at the longer term perspective, is doing a retest of this downtrend resistance line breakout. So and then this is also quite near the support at 90, horizontal support at 95. So I personally expect some rebound from these levels. Maybe to test 101 again as a short-term resistance level. And 2801 is the BlackRock Asset Management North Asia MSCI China ETF. Yeah, so for this also currently doing some pullback possibly towards a prior resistance quite as a support at the $19.20 level. Over here, this coincides with this slight range consolidation over here, which will act as support for price to bounce from. Then short-term resistance will be about $20 for there. Then 981 is SMIC. SMIC, I think some range consolidation for now. Tested this prior support 1650, then find some resistance pullback to this range level support at about 1530, 1540, and then just some bounce again. So maybe it kept in this 1530 to about 1630 for the time being. Next up is Oceanus. Okay, Oceanus, I think this it's a penny stock. So for now, it's just some consolidation going on. This 0.010 level was a prior support breakdown. So likelihood is still acting as a resistance for now. Then support probably 0.008. So this range trade over here. And for Marco Polo Marine, I think it could be doing some range consolidation for the time being. Given that it's still after another retest of the resistance at 0.072, price has pulled back. Looking at the longer term trend, it's also quite high at this channel resistance area. So yeah, price has been just range consolidation with support. I think 0.065 for there. So maybe some sideways consolidation for the time being. And next one is Yangzijiang Financial. Young Financial, I think it's some sideways consolidation as well at this prior resistance of prior support now acting as resistance at 33 cents. So that support currently is about 30, so it's 31.5 cents level. So maybe I think it's still gonna be some sideways consolidation is range bound formation for the time being. Yeah, maybe perhaps I'll pass my time over to my colleagues to answer some of the questions first. Thanks.
Hey, thanks, Zane. Yeah, maybe I'll just take this question by Michelle. So she's asking, Glenn, why is UOB quite lackluster compared to the other two banks? Thanks. I would say not just UOB. I think both UOB and OCBC are in I mean, if you compare, of course, to DBS, right, it's lackluster. But both also, if you look at the past 6 months performance, I think it's quite good. They're up maybe 10 to 15% kind of range, right? But of course, you compare to DBS, it's like up 25%. So the main reason for this, I think, with Singapore bank stocks, right, it's the dividends. So dividends are very important to the investors and the shareholders, right? So they look at the dividends, and then, if they see all three banks, all of them have quite similar like the way they earn money, right, is from the net interest margins and net interest income. And of course, fee income is the one that's going to be providing the earnings growth for this year and maybe even going into 2025. So if all three banks are going to be doing quite well, right, in terms of their income, then what is the differentiator that you have, between the banks? And that would be their dividend payouts. How much are they willing to give back to the shareholders, and whether or not they are more open to giving back more, right? So with DBS, I think it's widely known and it's been spoken about many times, is that they are not really looking at their dividend payout ratio, right? They don't cap it at 50%, 60%. They're just saying that we want to return it back to the investors. That's why they are just looking at their capital ratios like the CET1, and then they're going to lower it if need be to their optimal range. So that's why they are willing and they are able to say that they can give back more, right? And they said that they also said recently, right? And what we also feel is that they are able to return back quite a bit more. So there were questions asked at DBS whether or not is it going to have a special dividend, or they're going to further increase the base dividend for the first half, the second quarter, or even the full year. But of course, they haven't gone through the board yet, so nothing can be confirmed. But he didn't say no, right? The CEO didn't say no. So that's a very good sign. It means that there is a possibility that they will increase. But you look at UOB and OCBC. UOB is very prudent. So they are saying that no, they need because they are, I guess they're slightly different from DBS, where they are a SME bank. So they need to grow loans in order to grow their earnings. So they need that capital. That's the explanation, right? They need the capital to grow further. So without capital, if they give back everything to the shareholders, then they can't really grow. So they are capping very strict dividend policy, payout ratio policy of 50%. So that's known to the market, and they haven't really changed their payout ratio policy for a long time. So it's capped at 50%. So maybe the market is really it's really priced in that, okay, 50%, we'll take it as what it is. But at least they are showing good guidance and growth in their bottom line, which should increase the base dividends for UOB. Hence, they're performing quite okay. But with OCBC, it's not really known how are they going to further increase their earnings, because they are doing the offer on the Great Eastern, but they didn't really provide much information on how is it going to how they're spending this 1.4+ billion is going to improve. Is it equitable to the shareholders, whether is it going to further increase their earnings more. So, and then also it was mentioned in the last call at least that now they are looking at around 50% payout ratio. So they're following suit with the UOB, sorry, by keeping it around the 50% payout ratio range. Hence, that might be one of the reasons why people are worried that it's firstly they're spending so much money, which some are thinking why not give it back to the shareholders, right? And then secondly, they're also capping their payout ratio. If you look at their CET1, it's also the highest. So the capital, this is their highest tier of a capital, right? The CET1 ratio. It's very important because it shows how much the bank has in excess to give back or to even spend on acquisitions. So even you minus off this Great Eastern, if it goes in at 1.5, 1.4, 1.5 billion, they still have the highest CET1 ratio, yet they are capping it at 50% payout ratio, right? I don't think they will be able to do another big acquisition again. So it's quite funny that they would be capping themselves, and to give back to the shareholders. So it's quite, I think it's really unknown what they have in mind, and it's not very clear. Hence, that's why it's quite mixed on the direction of OCBC. If you look at their both their acquisitions as well as their dividend yield and their dividend payout ratio. So I think those were the three main factors why OCBC is also quite lackluster. As for UOB, I think it's really known. Sorry, the main question is UOB, right? It's really known that they are capping it at 50%. So hence maybe it's if you want to have a really strong dividend stock, then you'll go with DBS instead of going with UOB or OCBC. Yeah, so that might be the reason that there's another their peers are actually giving back more than what they are giving. Hence, people are going to their peers instead of going with UOB or even OCBC. Both of them actually. Yeah, not just UOB. Yeah. Okay, I hope that answers that question. I think I'll hand it back to my other colleagues. I think there are a few more questions. I'm not sure. Okay, thank you.
Let me take a few. Yeah, there are two. How much? Sorry. Media reports that MLT logged the most retail inflow year to date. Is it a positive? This also means MLT is more so by Insti, right? How do you view the impact of fund flow? Yeah. So, as you all know, MLT they got kicked out of the MSCI index. So that as a result, all those Insti that follows the MSCI Singapore, they have to sell out of their stake in MLT as well. So as a result, yeah, there was the outflow. But this inflow and outflow for retail and Insti is more of it happened in the past. So it is not really indicative of future as well. So yeah, how do you view the impact of fund flow? Yeah, basically, we know that MLT, a lot of the retail they started buying after the Insti sold out, after they got kicked out of the MSCI index. So yeah, yeah, I don't see much impact also like of fund flow, because we ultimately we also won't know whether the Insti or when will they start to pile back into MLT as well. So yeah, I hope that answers that. Are there any imminent refinancing required for Fraser's Lock commercial freight? MLT, Ascendus, Maple, Trinidad. Yeah, so I did a quick search. All of them have about 15% of their loans that are expiring in this current FY. Yeah, I think that's all for me. Yeah, hand over to Zane back or
Yeah, it's okay. I'll just take some.
Thanks.
Yeah. Okay. In terms of there's a question. What is the STI PE market average right now? So the average right now is about 11 times 11 times PE. What's the historical normal average? The historical average was 14 times. So if you look at the chart, it's been like coming down to the lows. The lows is you're almost hitting the lows. The lows are like 9 times, and this is like probably a year ago, maybe. Yeah, in our presentations, we used to show this chart to say why to buy, but it doesn't really matter. If it's cheap doesn't mean it won't go back. You just worry this reversion to the mean may not happen because Singapore stocks are just generally been derated. But just to give you the numbers, we are 11 times now. Average is about 14 times. Pre-pandemic, we were probably around 14 times. So after pandemic, we became worse. Okay. Yep. Okay, let me just answer some of the early ones. Sorry, it took so long. Hi Paul, would you prefer to invest in Singtel or Singpost for the short term or medium? Yeah, for the short term, it would be Singpost because you're waiting for the regulatory review. So if this happens, this stock will just pop out because that is definitely going to be better than the current circumstance. So for Singpost, the two main catalysts is the regulatory review. We're not sure how it's going to be, but we think it's going to be capital light. Maybe the authorities buy back all the post office for them and then just give them a fixed fee to run it. Something like, I think like I mentioned before, something like what Comfort does. That means the MRT is not yours, but you just run it and you either take some volume risk or something. Or another one would be like the Netlink type of model. You own the asset, but how much you can charge is fixed. We think it's probably going to be we guess the authorities take back the asset because I think they always wanted it to be asset like. That's our guess. And regardless what happened, it's just going to be better for Singtel. So it's only going to be good. So that could take the pop. Then the second thing is after that, the next share price is like we highlighted before. I think they'll just sell the Singpost Center. Of course, it's not going to be good for the earnings because half the earnings now come from Singpost Center. But I think the market reaction will just pop up because they're going to just give some big capital return and so forth. The only reservation in the medium term for Singpost is that so Singpost got the mail service, which nobody mail anything now. But then within mail, there's also e-commerce. So that's doing well. Then there's international parcel, that means moving things internationally from China, for Alibaba or whatever. Then the third one is the logistics in Australia. So the logistics in Australia isn't doing well. I think they hinted very strongly that there's a lot of overcapacity. So after they make all this acquisition, I think that won't do well. But at the same time, that will also pressure them to, my own guess, I won't say pressure management, that will incentivize management to sell off Singpost Center. So at least prop up the results or prop up the share price. That's my own theory. Singtel, we so like it, but just that in comparison, Singtel takes time. People will only re-rate the stock if they sell a bit of Bati, if they do better results. So that one will take a more gradual pace. Actually, okay. Invest in Singtel or StarHub. Okay. My preference would be Singtel because my only bet is that okay, so this one which one would be better choice, Singtel or StarHub? Or both seem to have better reviews. So for StarHub, operationally they're not doing well. I think they're only guiding like 1 or 2% growth. And then they are burdened by all the investments. But the share price just being propped up because expectations of a merger with M1. I think that merger will happen, but I don't think so soon. I mean, that's my own view. Because of course, Keppel wants to sell as fast as they can. You can sell today, they sell it so that the CEO can meet his objectives. But I think for StarHub, the problem is they're still doing this internal restructuring. So imagine if they are in the middle of a major IT overhaul, then you have this integration, then it just makes it a bit too complicated for them. I mean, that's my own view. I mean, right or wrong, I'm not sure, but that's my own view. I think any merger probably better when, ideally, if I was StarHub management, I want to have the merger completed, then show some results in that, or my DARE Plus is doing well, then the share price can bounce back up. Then I'll do this acquisition. Then I'll be in a better position, stronger position. Then my results will look better. Then I want to do it. I mean, that's my own view. Of course, all this is beyond even the management. It's all up to it's their parent, of course, that decides. But that will be my own choice if I was to StarHub management. I want to look pretty before I go and marry someone, right? So now that I'm still in the makeup phase, still fixing my IT, I'd rather wait. That's my own view. So that's why we still prefer Singtel. Operationally, fundamentally is stronger. And then StarHub already got that big pop because of all this stock. And then I just worry the market's patience might wane, because if this thing doesn't happen, then the thing might drift down because what happened to that merger? It didn't happen. Okay, a very long answer. Okay, and then Mr. Ang has also answered on the share split. that Nvidia has this 1-to-4 share split, and then after this in 2021, Nvidia had the 1-to-4 share split, and then the liquidity improved, and then even Google had a share split, also the share price grew. So thanks, Mr. Ang, for the answer. So I think that was his answer. I think after every share split, the thing has performed well. Of course, concurrent with a very good operating performance. Okay, let me answer. What should we be looking out for arising from the coming UK snap election? 4th July. Okay, so I don't know much about the election, but the exposure the Singapore stocks have is number one, like CDL has rented housing. They have hotels there. A lot of property. Of course, Oxy also got development. But I'm not sure anyone cares. But then the second thing is of course there's a lot of PBSA. A lot of student dorms there. So long as none of the policies affect property investments or student dorm, it doesn't seem to be. It seems to be like a continuation of the current policy by the Conservative government if Labour wins. So we don't see, but that's the thing we're watching for. I think what we're more interested in is the Bank of England start to cut rates. This is very likely because their inflation in the UK used to be 11% at the peak. I can't remember when, two years ago, I think. Then it's now 2%. So there's a huge possibility they will cut rates, and this will benefit all the UK ones, especially like Elite, Commercial REIT, and so forth. Yeah. Of course, the other company that has exposure in UK is of course Comfort with all the bus service. But I mean I don't see any literature talking about it. Of course, they are talking about cutting back on fiscal spending, but every government says they want to cut back, it never happens. How much impact will the current incident be on SIA? For instance, investigation showed that there is some negligence. Yeah, my own view on share price, it won't impact much because all analysts, I mean, not only the airline analysts, any one-off things. I mean, just like when Google has a fine from the authorities, the share price, the market will just take this as a one-off and then just move on. The initial impact will be the news. Then after that, the market will just usually move on. I think we don't actually have any. Usually there's not much impact. At least it's a one-off. It's like a one-off loss, disposal loss or whatever. So unless there's some permanent impact, and if you look at the safety ranking of airlines on safety, I was surprised. I mean, SIA is not even the top 10. I think number 13. So again, this is a comment. And, yeah. So this thing won't impact. Yeah. I think the impact already happened when the news. Please comment on the outlook of AEM after the bad results. Okay, this one we did on the 13th of May, but let me just recap. So for AEM, their outlook is still weak. I think for the second quarter, the guidance is, because they didn't change the guidance, so it means that AEM second quarter revenue will be down at best 13%, at worst down almost 40%. Okay, my connection is a bit, but so, and any recovery they're looking at is 2025. So the recovery is, I think they secured AMD as a customer. But like AMD, I don't think they're going to be able to compete with NVIDIA because even if you want to compete with NVIDIA, I think many will know this, is that NVIDIA, to run the AI GPU chip, you need high bandwidth memory. That means the best kind of memory chip. And Hynix all sold out. There are only two guys who supply Samsung and Hynix already sold out. 2024, 2025 sold out. I guess we all know who bought it. I mean, NVIDIA bought everything. So even if you want to compete with NVIDIA, AMD is going to find challenging because they can't get supply. Interposers, they lock out. Supercapacitors, so they lock out. Apparently, even 40 gigawatt cable also, NVIDIA has kind of mopped up all the supply. Okay, but anyway, just to go back to AEM. The big thing for AEM is that if AI chips, so if you see the news that that PC demand has surged because people want more AI, people want to buy AI chips. Because people want to upgrade their PC because of AI chips. Or then I think that one is a real kicker. Then all the tech stocks will do well, including AEM. Because then the volume can come. Because AI GPUs, the volume is probably 4 million, 5 million, or maybe now 6 million. Like I said, the PC market is 300 million. Smartphone is 1 billion. So unless people buy more phones or more smartphones because of AI inside, then that was a big kicker. That one you really can. All the semicons will do well, or the whole industry will do well. But I don't see that. I mean, at least for me, yeah. Okay. the MSCI STI index, what are the new? I thought, okay, let me get back to you. I thought there were 5 constituents that got kicked out. I need to get, let me double check. I thought they were kicked out instead. I thought Citrum, everything all got kicked out. Citrum, the Maple Tree, I thought those were kicked out. I'm not sure their addition. They were added into they were kicked out from the main index, I guess the large cap index, and they were shifted down to the small cap index. So yeah. So I need to double check. So I didn't know there was anything new. Yeah. Sorry if I missed it, but anyway, yeah. I'll put it in the community chat if there's anything. What's your view on nanotech as their nanotech? Again, it's my own view. Probably wrong again, but I think nanotech looks interesting for me because I think they secured one new customer. My guess it could be Samsung is their new customer. And this is not large. This is so for Apple they do like your phone, all the buttons, those tiny buttons. So they do coating for all the buttons and so forth. But I think for nanotech they secured one new customer for Samsung. I think, and it should be the large form factor. That means a whole phone. So not only do you get a new customer, but you do more work, not just the little buttons and all that. So I think it looks positive for me. Yeah, I haven't met up with them recently, so I would need to update on that. Yeah. Okay. I'm not. Glenn got one more. Then I think we can go to TA and then try and yeah. Oh, all right. There's one more on Vilma. Yeah, sorry. Okay. For Vilma, I think no change in our comment on Vilma. It's still going to be challenging. So for Vilma, how to monitor Vilma is either sugar price move, palm oil price move, or China consumer does well. So palm oil, sugar price already came down. Palm oil mostly sideways because they're trading at a premium to soy. And then for China consumer, like I said, now retail sales is still weak. So China consumer, either the hog prices go up or edible oil, suddenly everybody wants to consume more high-end edible oil. Yeah. So we don't see that happening. So that's why I don't think Vilma is still going to be quite sluggish in the near term. Okay, Glenn, sorry to...
Hey, no worries, Paul. Yeah, so follow-up question from Michelle. A quick follow-up. Am I right in my analysis to say that UOB's recent quarter's results was rather flat while the other two banks performed quite well? Is your target for UOB still around $34? Yep. I'll take the last one first. I'll answer that. That's easy, but yeah, the UOB, our target price is still excuse me, $34.90. So to say that UOB's the first quarter, right? I'm guessing you're saying it's rather flat compared to the other two. I don't think that's really true. If you look at the first quarter's results, first quarter 24, both OCBC and UOB, their earnings, right, their PATMI was actually similar. So they were both up 5%. Whereas compared to DBS, it's up like 15%. So if you look at it that way, I don't think it's fair to say that UOB, is flat compared to OCBC. So they're both, I guess, if you compare to DBS, both OCBC and UOB are flat, right? So I guess in my opinion, what's the difference between OCBC and UOB, since they perform similarly, but UOB's share price is a bit more lackluster compared to OC's, right? DBS, as I mentioned earlier, I think that's quite clear why they're performing well. So for OCBC, it's really a lot of unknowns, right? For them, they did the GE acquisition, to buy out the rest of Great Eastern. So that's also one thing that is unknown. Nobody really knows how is it going to improve the overall group in total. They did say it will add like 0.2% to their ROE, but if they manage to synergize it well, and expand their group, and then go into the idea and everything, the group's idea and their plan, then it might actually add more than that. Also, so the other thing that's different that your OCBC has over UOB would be their CET1. As I also mentioned earlier, it's a lot higher than UOB. So OC's is around 16.2 before the acquisition. So if you take, let's say, even 0.7%, right? They say 0.6, but let's assume 0.7 to be safe. It's still 15.5% compared to UOB's is like 13.9. So that's the difference where, it's also unknown what are they going to do with their excess capital, and if they will even increase dividends or possibly low possibility, but make another acquisition that will further improve their bottom line. Yeah. So with UOB, it's just been like status quo for the past year, especially after their city acquisitions, right, in ASEAN for the ASEAN assets. Yeah, and then they have just been working on whatever they have right now with no new news, basically. Whereas OCBC, you know, they are coming up with a lot of new like acquisitions and new news. Hence, that's the difference between UOB and OCBC. And of course, you know, DBS being the main outlier, I guess, in a positive way. Yeah. I hope that answers the questions and it's enough information. Okay, so I'll just hand it over maybe back to Zain for the rest of the TA. Thanks.
Okay, thanks, Glenn. I'll continue with the TA. Okay, so first up is on the Hang Seng Index. So Hang Seng Index currently doing some pullback, but I think it should be finding some support at this around this level, which was when you look at the recent price action, is a breakout this tight range consolidation back then. Resistance was around 18.5K. So we're back doing a retest. So I'm expecting some rebound over here at this high resistance. And yeah, previously this was also a swing high resistance back then, August 2023. So for now, if it does rebound, the short-term resistance wise would be around this 19.1, 19.2K level for Hang Seng Index. Okay, then next one I'll move on to Bitcoin. So for Bitcoin, I think still looking positive recently. So after the last Monday, there was a surge, and then to test this horizontal resistance as well as this trend line resistance at around 71K level, there's a pullback to retest this resistance breakout on support. So this retest was around close to 67K. So currently, I think could be some sideways consolidation, but my view is that the likelihood is that it still be able to continue its uptrend over here with higher highs and higher lows being formed, as long as it holds this 67K level over here. Okay, next one is on gold. So gold recently did a retest of the high at 2431. There was it made a new high briefly before a pullback. So for now, it's back to retest this trend line breakout as well as this horizontal resistance previously at 2345. So over here, I'm expecting some bounce to take place. Yeah, but it could be some resistance at 2380 for now, given the sharp fall on Wednesday, Thursday. Yeah, so some short-term resistance. So I'm thinking maybe some sideways consolidation for a time being first. Okay, then next up is on silver. So silver has been a strong performer, actually outperforming. When you look at the recent price action, there was a break above the previous high at 29.8, which was back in 2020 as well as 2021. So recently, price broke above it. This could be a retest over here which could be acting as a support. So with that, I think TA wise is still looking with prior resistance acting as support for higher highs ahead. The next one is on UOL. So for UOL, I think currently it's probably just range bound for now. We have a resistance at about 570 and support we see around 540. So yeah, I think it's just this range consolidation. And then for Wilmar, I think it's still pulling back slightly, but recently just kind of flat. Overall might be just trading in this descending wedge over here. So yeah, I think price action wise could be still quite muted for now. And near-term support will be around 309.310. Hi, Phyllis. For bots is the Global Robotics AI ETF. For this, currently, I think it's undergoing a bit of a range consolidation, but I think should be still okay. given that there was a breakout of this downtrend resistance line previously, price went up. It's going through we have a range consolidation between 31 to about 32. So yeah, this could be like a bullish black consolidation. Then let's see whether it can break upwards again after. The next one is on some Hong Kong counters again. 688 is a fully China overseas land and investments. Currently price went back above 1480 is price support. Then over here went up to test the 1650 as well, this horizontal resistance. So I think for now it could be just some sideways consolidation for the time being. And 1109 is China Resources Land. For this is also retest of the 3170 resistance over here. Then some pullback currently, but I think price should be able to get some support from the prior resistance between 2850 to about 2950 area over here. And then you're likely to do some sideways afterwards. Okay, then next one is 123, which is USU property. Okay, also quite similar. Also another retest of 680 prior support, this resistance, and then another back test of the resistance breakout recently around 560. So I'm expecting some bounce over here with some sideways trading afterwards. Then short-term resistance could be this 6.1 level over here. Okay, then next one is a TA on Franken. Okay, I think today it's moving well. Okay, yeah, still continuing the momentum. So I think for that, next resistance level probably around 153, then followed by 158. Yeah, for Franken. Yeah, Christine T on Singtel and Sets. Okay, for Singtel, I think probably it looks like an ascending triangle consolidation. So some resistance at 244, 245, but forming higher low. So my view is that it could likelihood is that it could move higher if there's a break of this resistance to test like 250 again this level, then 254 upward. The next resistance level upwards. Yeah. For sets. For sets, some range bound consolidation currently, but the good thing is that it's still holding this 253 level as a support. So for now, I think could be testing the high upper end of the range at 261 to 264 again. Then we just do a bit of sideways, then I think you can break out resistance to test higher levels like 270 for sets. Yeah, Peter. Next one is Bank of China. Okay, for Bank of China, I think currently some sideways consolidation, but should be still the overall uptrend is still trending well. So I think for now, support could be around 380 about there, this horizontal support as well as this uptrend support line. Okay, and then T on Crocs and Hello Auto. Okay, so for Crocs, I think it's another retest of the resistance over here at 147, 148. But I think it's looking positive. Looks like an ascending triangle in the longer term. Higher lows are being formed, as well as we saw a build up in the resistance recently with the lows at 139. So I think my view is that it should be able to trend higher in the near term to break out this resistance at 148. To maybe test the next key resistance at 160 area, about that. Then for Palo Alto, I think recently after the results gap down, there was a recovery afterwards. So Friday there was a break above 314, 315. Then I think price could be able to climb higher to test about 327. Then the next resistance above that will be 335. The next one is on Food Empire. Okay, for Food Empire, I think looks a bit sideways currently. So at this level, it's about some support about 109, 110 about there. Coming from this prior horizontal range breakout, as well as this blue color uptrend channel support. Yeah, so I think it should be, as long as price continues to hold the lows around here, it should be able to do some rebound towards 115 to 117 for the time being, which is this recent horizontal resistance. Okay, next one is on Jardine Matheson as well as Cycle and Carriage. So Jardine Matheson currently recently just pull back again towards this prior resistance zone, which is about 37,670 about to about 38.40. So I'm thinking for now it could be some rebound on sideways consolidation for the time being. Then short-term resistance will come from this recent breakdown level, which is about close to $39. For Jardine Cycle and Carriage, I think should be still positive. Recently price broke out above this 27.10 level. So this looks like an inverse head and shoulders over here. Let me just draw it out. Yeah, so with that, as long as this resistance is able to hold as support, continue to hold as support, I think we should see price trend higher to test the recent high again at 28.20. Then maybe some new high afterwards. And then some of the other banks, like China Construction Bank, currently I think some sideways consolidations at the resistance of 590. So I think with that, maybe some sideways first, and then if you can break higher, there'll probably be new highs ahead to test about 620 to 630. Okay, then for ICBC, also it's quite similar, range trading currently at a resistance of 480. Support will likely come from 460 about there. So I think for now, some consolidation band can break the recent highs. Could see price go higher to test about 520. Okay. Maybe about 490 first and 520. Okay, for Adobe, I think some range consolidation first, but maybe some slight weakness for now. Price is like for now some resistance is coming in at $489, a bit of a lower high in process. So might be doing another retest of this resistance breakout 477. If you can't hold, then maybe price could go lower. Yeah. And then for Fortinet, I think it's quite range bound currently. With the recent breakout 5980 as holding as a support. Resistance will come from this support breakdown at 6280. So it's just quite range bound at the moment. Then for Yum China, I think it's still trending downwards recently with looks like a lower low being formed below the support of 3630. So I think we could see another retest of this trend line support over here again. Maybe if we bring it down to 3460 about here, to match with this lows over here. So I think we could see a continuation of the downtrend. Okay, hi. What's the TA for WT for oil WTI Brent? Okay, for oil, I think oil is generally still quite sideways at the moment. Yeah, it's just range bound between is 77 and to about $80. So I think for now it's still holding like this. Then T14 is TJ Rentang. So for this, I think it's like a new high. It's a new high. So recently price broke out the previous high at 233, then some consolidation before moving higher. So with that, I think current momentum should bring it higher for the time being. Yeah. So I think that's all from here. Now we're time to call. Yeah, thanks.
Yeah. Okay. Yeah. Thanks. So let me just address the earlier question on the, there were 5 constituents in the MSCI Singapore index that was removed. There's no replacement. One of the reasons is that under the standard index for developed countries, the free float requirement is actually pretty high. And also, I think with the banks jumping in market cap, they have this kind of cut off. I'm not sure how it exactly works, but like if 85 to 90% can cover it, then of the market of the Singapore universe, they will actually just as long as they can cover it, satisfy the requirements apparently. I'm not sure how they do the computation, but mainly because the free float didn't meet, so that's why the 5 were removed. There's no new addition. So basically the MSCI index, the size will just get reallocated. That means the banks will get bigger and so forth for the allocation. So there's no replacement. Yeah. Regarding the question whether there's any replacement. Yeah, on this food empire, yeah, so I'm not very sure of the update. The only thing is that I think the market is getting a bit worried of their margins because in their update, they only gave revenue. They didn't give much earnings guidance compared to the previous results. So we just hope, we think the earnings will be quite weak. But the amazing thing about Food Empire is that they always have this ability to pass on higher costs. So any weakness is probably going to be only near term. Yeah, and I guess if you want to stress test this company, I mean, they got a war with Russia and they still can perform well. So I guess, yeah, that's my only thing. They've got this ability to pass on costs. Yeah. Okay, any with that, like to thank everyone for your time and especially for your questions. Yeah, sorry, I think half the team is not available. So we will hope to see you again next week. And thanks again for all the questions. Yeah. Bye-bye and have a good week ahead. Thanks.